Welcome back to the channel, everyone. Today I want to talk about how Citadel is trading and controlling AMC using lunar cycles. And I also want to talk about the Bank of America predicting a 20% market correction in the next few months. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So we've got a tweet here from Edward Burchuk. Citadel Apogee, which is their dark pool, possibly used an algo that traded on lunar cycles. And he's wondering if Citadel Connect, their new dark pool, is using that exact same algorithm. If you weren't already aware, Citadel Securities closed their Apogee dark pool in favour of their alternative trading venue, Citadel Connect. You've probably seen this article a few times before where they spoke about Citadel Connect being around 5 times the size of Citadel Apogee. But what you might not have known is that Citadel Apogee was actually implementing lunar cycles and lunar dates for their logarithmic returns of their global portfolio. As this article says, this figure graphs for each day of the lunar month the average daily logarithmic stock returns of an equal weighted global portfolio of the 48 country stock indices. Day 0 is a full moon day and day 15 is around a new moon day. And as you can see, the average returns are substantially higher in the middle of the cycle than they are at either end of the cycle. Research apparently shows that the effect is strongest in emerging markets. Here we chose the iShares MSCI Emerging Markets ETF. The algorithm therefore goes long in Emerging Markets Index ETF 7 days before the new moon and switches to a short position on the ETF 7 days before the full moon. Now it'll be super interesting to know if the off-exchange venue for Citadel Connect is using the lunar cycles and how that actually interacts with AMC. But it's actually super interesting to know that there's been university level papers written about lunar phases and stock returns. If Citadel Connect is using that same algorithm that Citadel Apogee was using, it'd be really interesting to know how we can use it to our advantage. Moomoo are currently offering their biggest ever promotion, where you can get 5 free stocks valued up to $3,500 each. So I wanted to break down exactly how you can get every single one of these free stocks. When you open a Moomoo account, you get your first free stock valued up to $3,500. When you deposit any amount, you get your second free stock, also valued up to $3,500. And if you deposit $2,000, then you get the 3 final free stocks, also all valued up to $3,500 each. So that's potentially around $17,500 in free stocks that you could get just for signing up with Moomoo and making your first deposit. Obviously linked in the description below. Edward has also looked at the AMC parabolic SAR indicator, and the SAR indicator is the stop and reverse indicator. He says that angular momentum is ramping upwards similar to early January and late May. Now obviously we know that AMC is right at the very end of cycle 2 and is behaving very similarly to what we saw back in May, just before the June run-up. I do think the start of cycle 3 is right around the corner, and I do think AMC will be setting new highs very soon. I think especially because the Christmas bonus period is just around the corner, and also tax returns are just around the corner as well. And therefore millions of Americans are about to have a huge inflow of additional spare cash that they wouldn't usually have as a result of Christmas bonuses. That means that tons and tons of Americans are going to have some spare cash to invest into the stock market and buy some more AMC. And I personally think the hedgies are vastly underestimating just how much additional cash is about to flow into AMC over the next month or two. Although some firms that aren't underestimating this cash inflow is some new entrants on the 13F filings. Here we can see that Bank of New York Mellon just added an additional 545,000 AMC shares. They're now holding around 2.3 million shares, valued at around $90 million. On top of this, Jane Street are selling off a massive amount of their put options. They've just sold off 4.2 million puts, leaving themselves with around 4.2 million puts remaining. In addition to this, Jane Street have added to their call options position, buying an additional 958,000 call options. They're now holding nearly 14 million call options. Jane Street are currently nearly holding around 3 times more call options than they are put options, and therefore Jane Street also sees AMC going up as well. On top of buying more calls and selling their puts, they also bought an additional 64,000 AMC shares, so they're now holding around 227,000 shares. Not as many shares, but they are holding a lot of call options. I think that is a super bullish indicator because we've seen so many institutions buying more call options and selling off their put options. We've also got Al from Boston saying, do you guys realise how close we are to actually squeezing? Pretty darn close. He says days, maybe weeks, especially if GameStop drops their NFT. That would need trillions of dollars to cover. He says GameStop will pop and we will follow in trace. So sit back and stop worrying, we've already won the war. He also thinks that GameStop will start the squeeze and AMC will follow. As I've said in my other videos, it's the same institutions that are shorting GameStop and also shorting AMC. Therefore, if either of those stocks squeeze, then the other one will follow suit very shortly after. Because obviously if those institutions get squeezed shorting GameStop, well, then they've already been squeezed and therefore their AMC positions will also be squeezed as well. Because obviously if the entire hedge fund goes bankrupt, they not only have to cover their GameStop shorts, but they also have to cover their AMC shorts and all other shorts that they hold as well. I also wanted to quickly touch on Ryan Cohen's new tweet, and I basically think he's saying here that the hedgies are about to get screwed. Ryan tweeted saying bedtime stories by Dr. Ruth and tweeted a photo of the Sex for Dummies book. I think he's basically saying that hedgies are going to be royally screwed and obviously that they are dummies. We can also see recently that AMC has been nicely setting some higher highs every few weeks. Hopefully AMC can continue this path and move upwards through this area of resistance between $42 and $46. AMC's obviously attempted this breakout numerous times, pushing in towards this $44, $46 region, but hasn't yet been able to break through the $46 resistance. I think we'll keep on riding this upward trend line, breaking through this $46 resistance, and then our next test is around the $52, $53 area. I also wanted to talk about Bank of America's warning signs of their 20% drop. A Bank of America strategist has bleak prospects for equities going forward. She said in a recent note that data indicates that the S&P 500 may fall 20% over the next 12 months. She also said that many stock valuation measures are currently extended by historical standards. She said the current landscape of stock valuation measurements does not paint a pretty picture of what's coming for the market. In a note to customers on November 15th, Bank of America shared that 15 of their 20 market valuation targets are historically high, and therefore Bank of America is actually warning customers that the market is currently very overvalued. Some of the most serious offenders are some that I've actually spoken about on the channel before, such as the Shiller price-earnings ratio. Price to book value is also very overvalued for many companies in the market. Companies' value to EBIT is also overvalued. Cost to operational cash flow, business value, and the S&P 500 overall market value in relation to GDP are all very overvalued metrics. She said that expectations in the market at the moment are above those seen during the dot-com bubble. I've also touched on the inflation data over the last few months, and I do think inflation will very soon be catching up with the wider market. I do not think we can hold 6.2% inflation and even higher in November and December for much longer. It's something that couldn't be held, obviously, back in 2008, and therefore we're just waiting for a small catalyst that's going to crash the market. And finally, I also wanted to quickly talk about the 47 members of Congress that have violated a law designed to stop insider trading and prevent conflicts of interest. Obviously, in my video yesterday, I spoke about that massive conflict of interest between the new judge and obviously her partner who's working for the defendants. But obviously it turns out it's not just her, it's not just that one judge that has this conflict of interest. There's actually 47 members of Congress that have violated this law. Insider and other media outlets have identified numerous US lawmakers not complying with the Federal Stock Act. Their excuses have been ranging from oversights to clerical errors to inattentive accountants. The ethics watchdog and even some members in Congress want to ban lawmakers from trading individual stocks. And the biggest problem I see is that while lawmakers who violate the Stock Act face a fine, the penalty is usually small, $200 is the standard amount. So there's these members of Congress like Nancy Pelosi making millions and millions, maybe even hundreds of millions of dollars every single year, and if they get caught insider trading, all they have to do is pay a $200 fine. That $200 fine is simply the cost of doing business illegally, and it's not really a very big cost either. And sometimes this penalty is even waived by the House or Senate ethics officials. Obviously, I'll leave the link to this post down in the description so you can see some of the individual breaches that have been noticed over the last few months. Guys, be sure to let me know down in the comments below what you think about Citadel potentially trading on lunar cycles and how you think it could be impacting AMC. And if you haven't already, be sure to sign up to Moomoo to get those 5 free stocks valued up to $3,500 each. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.